Good morning, ladies and gentlemen, and welcome to the show on this Wednesday, the 26th of May, 2021. Thank you for tuning in. Glad to have you guys here. Now, what I want to say is all hyperinflations are different, and we've never had a hyperinflation of this magnitude that could be coming very soon. And, well, it's like this. One person can catch the flu, and they have body aches and stuff for a few days, and then they get over it. It's no problem. Another person catches the flu and they get really sick, end up in the hospital, pneumonia or whatever. And that's the way with hyperinflation. Hyperinflation is similar. No two cases are the same. We've never seen a hyperinflation of the world reserve currency to this extent, where all of the other fiat currencies are connected to the world reserve currency. And a hyperinflation is caused by sentiment. It's a loss of confidence in the purchasing power of the particular fiat currency. And what happens is it's a self-feeding, self-perpetuating cycle. That loss of confidence, we could be very near the edge right now of that loss of confidence. And what could trigger it is something that could be extremely close right now, too, is silver. We're running out of silver. It's as simple as that. It's getting harder and harder to allocate it. And we could be days or weeks away from a massive move of retail silver sales. People trying to hedge against inflation. And realizing silver is the only asset class that's been suppressed for this long. It's cheap. In other words, it's cheap, guys, right now, compared to the way inflation has moved up on almost everything, and the prices are moving up on almost everything else, including all other financial assets. There's no place for people that want to hedge. There's no place better right now to hedge against a coming massive wave of inflation than silver. So retail sales very likely. And as we see the prices moving up on silver, we also have to understand that that's going to spur more buyers into the retail space. People make complaints out there. They say, hey, I can buy silver. I have to pay this big, huge premium. And then if I try to sell it, they say, well, they're going to not even want to pay me spot, or maybe they'll pay me spot. This is an argument I hear out there, but you have to understand something. When the price explodes on silver to the upside, and yes, there's possibilities of triple-digit silver, where silver can go above $100 an ounce. Very quickly, it can move up to these ranges. 100, 200, 300, even $300 an ounce. When you see those massive price increases in silver, don't think gold is going to sit on the sidelines and not move up too. And we could be looking at, like, I don't know, $5,000 gold. But you know what's going to happen when that happens? You're going to see all these little businesses open up in places where maybe you got a closed shopping mall or whatever, in your town, and there's for lease signs on the windows. They'll buy or rent a location, and they'll slap signs up on the glass overnight that says, "We buy gold, we buy silver." And these will pop up overnight in almost every city. But once the silver price and gold price start to become unleashed and start to go up, like silver, maybe silver's up to $200 an ounce, and maybe gold's at 4,000 or 5,000. You'll see these places pop up everywhere, and they're just going to be wanting that gold, wanting that silver like unbelievable. Like, they'll buy anything that even smells of gold or silver, like things that they won't even buy right now. when these prices get way up like that. It's about ready to go down, guys, is basically what I'm telling you. I think the whole thing is about ready to go down, and we're going to see massive moves to the upside. And this is one of the things, or maybe the big thing, that could actually trigger the demise of the fiat currencies. Because when you see the gold and silver price go way up high like that, it's going to have a massive psychological effect on the dollar. It's a very strong indicator that we're into a crisis of the currency, you know. And like I said before at the start of this show, this is all about confidence. And as confidence starts to be eroded, and I think when they put in that number of 4.25% for interest rates, not interest rates, but inflation right now, that's well above their 2% target. And believe me, right now, every second that goes by, it's getting hotter. It's getting hotter and hotter and hotter, guys. And we could be on the edge of, if these companies that use silver in industry even get a smell that they're going to have a real shortage in the 1,000-ounce bars, they're going to try to go into accumulation phase, where they try to accumulate some ahead of time so that they can keep their factory lines going. And they're not going to accumulate small amounts either. They're going to be wanting to buy up all of what's left of the 1,000-ounce bars. The real silver shortage, we could be on the edge of it, that I've been talking about for years. We could be on the edge of it, and you think prices of silver could just explode to the upside. And I can't tell you, we might be awfully close to all this happening right now. Right now. Let's get started, and let's get in there and take a look at the markets today. Let's start the charts right here and take a look at what's going on. We're seeing the silver price is still languishing. It's $27.84. It's down 14 cents on the day so far. So it has lost a little bit of its gains. Now, I told you guys yesterday, I said it's probably going to see the silver price moving up and maintain its gains. Well, we had a little decline of 14 cents, but it's probably going to heat up again this afternoon. It wouldn't surprise me if it starts to poke its head up well above the $28 range later today or maybe into tomorrow. It's getting very, very hard for them to manipulate the price down with the paper short contracts, considering that there's such little physical supply out there, such a constrained physical supply. Any little surge now in retail demand or industrial demand is going to clean up all that's left on the shelves as far as silver is concerned. They don't have huge inventories of silver that's ready and deliverable for sale right now. It's gone. They're down on rock bottom right now. They're just hoping and praying that people aren't going to start buying and buying big in the retail side of physical silver. They're hoping and praying that won't happen because they haven't got it. They can't cover it. They get a massive surge of demand. They just can't cover it right now. I know that they're on the ropes. All it takes is one more punch, and this is it. They're going down. 27.85 right now. Looking at gold. 1903. It's up $4.90 right now for gold. Well, gold is maintaining, like I said, is maintaining its, and you can bet that silver is wanting to maintain its price increases that we saw just yesterday and the day before, you know. Okay, cryptocurrency today. What we're looking at is 1709 billions, and it's starting to heat up a little bit again. We're starting to get, I'll tell you guys what I think about cryptos. I think when Elon Musk talked about its energy thing, you know, about Bitcoin and stuff, you know, I think that was a change in sentiment toward Bitcoin. Bitcoin reminds me of like an old lion, you know. He's still out there. and he's still the head lion, the head of the tribal lions, you know. But he's old and his teeth are gone rotten and everything else, you know. And there's a lot of young lions out there who want to take his place, who have sharp teeth and are coming of age. And these are these other cryptocurrencies that are hot on to take the place for Bitcoin, you know. Ethereum is making the push, but I don't think Ethereum's going to be the one. Keep your eye on these other altcoins. You know, coins like Chainlink and coins like some of them further down on the list. Keep your eye on them. There's Theta; it's doing good. Keep your eye on these other ones down lower on the list. Coins that could move up impressively. You know, and start to push at Bitcoin itself. You know, coins that are a lot faster. Coins that Bitcoin is only capable of 7 transactions per second. Some of these coins can do 10,000, 100,000 transactions per second. You know, keep your eye on these other coins. I don't think Dogecoin is going to be it. Dogecoin is going to be it either. You know, that was started as a joke. It's moved back down to 34 cents. Dogecoin, there's many billions of Dogecoins out there. And Dogecoin is kind of like, it's kind of like first gen technology too, you know. I think the coin that's going to really take this is going to be something that's got more advanced technology. I think technology is going to start to be important now, just like it was in the automotive industry. You know, when cars were first invented, there was all kinds of Stanley Steamers and all kinds of different companies come in and started making cars. But what we seen happen in America was we got down to the big three automakers, you know. And that's what's going to happen with these coins. You're going to see an awful lot of them drop back and stuff and vying for position. And in the end, it's probably going to be 3 or 4 really big ones. If you could invest in those really big ones, the ones that are going to be like the top 4 when this is done, when all this is done, you're going to make tons on your investment. So a little bit of research right now on this side is good. It's a good thing, you know. Let's take a look now at the Dow Jones Industrial Average, and it's up 53 points on the day. 34,366. Take a look at oil. It's down 51 cents, down 0.77% at 65.56. Move index is going along. It's a slowly descending move index. It's at 53.72. So the credit markets are fairly stable. Now let's take a look at bonds and rates. And we're seeing bond yields moving just a tiny bit. Possibly the biggest mover in the bond yields today is the 30-year today. It's moved 1.3 basis points at 2.24. And we're looking at a 10-year at 1.55. You know what? These bond yields could explode to the upside, and the Fed might be forced to do something. I'm thinking yield curve control because of the rate of inflation. The bond yields are too low right now for considering the amount of inflation. A 10-year bond at 1.56, and we got an inflation rate of 4.25%. By their standard, what's the real inflation rate right now? I'd say it's north of 10%. You know? And I think Shadow Stats would agree with me on that. That the real inflation rate is not what they're putting in at 4.25. And they're going to have to start to acknowledge the real rate of inflation. And when that inflation is only heating up as this summer progresses, banks are the biggest producers of money. You know, I call it money, currency. They're the biggest producers of currency. When they make a loan, that money pops into existence. Never existed before. A second big thing that puts money into the system is when they send you these stimmy checks. That's injections of liquidity directly into the system. It's what's called unsterilized. Now, when they do quantitative easing, that's sterilized. But this is unsterilized injections of liquidity directly into the system, monetizing the debt, monetizing everything. They're monetizing the debt right now, you know? And what we have is we have a central bank that's basically trying to hold the system together all by themselves. But once bank lending starts, which I'm anticipating, if it hasn't started already, we're going to see a system that's totally awash in liquidity, totally awash in money, money everywhere, well, currency everywhere, you know? And this could really lead to something that's very monstrous, because I don't know for sure if we're going to move into a slowly move into a hyperinflation, or people are going to all start to lose confidence suddenly all at once, and we go in rapidly into a hyperinflation. It could be extremely rapidly into a hyperinflation. And if that happens, hyperinflation can shut the system down almost as fast as deflation can. It's frightening what could happen if we go into a very rapid hyperinflation because of a loss of confidence in the fiat currency itself. Let's hope that doesn't happen, but it could. We're taking a look now at the U.S. dollar index, and the U.S. dollar index is going up just a little bit. It's at 89.94, but it's still under 90. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.